We are moments away from the start of trading on a very busy day for earnings. This is Bloomberg Open Interest. I'm Matt Miller. Take a look at futures. They are down across the board right now. You're about to hear the bells ringing on the New York Stock Exchange and down at the NASDAQ. On the NYSE, we have Ameris Bancorp ringing the bell, and over at the NASDAQ, we have Iron reading the bell, IREN there. Cool hats. Let's see if that does anything to move the markets. After a slew of earnings came down, we still have red arrows across the board. Let's get over to Katie Greifeld right now and see where the major averages are opening up. Katie?
Yeah, you take a look at the big benchmarks right now. A little bit of a breather after what we saw yesterday, that big Monday rally. Currently, the S&P 500, I'm going to go ahead and call that unchanged. The NASDAQ 100, meanwhile, taking a little bit of a dip lower. The NASDAQ 100, your big tech names down about 0.2%. Meanwhile, your small caps, that rotation faltering today. The Russell 2000 off by about 0.5%, but it's early still. But one stock we're keeping an eye on at the opening bell, of course, is UPS, reporting profit that fell short of analyst estimates, with the delivery company really facing pressure from wage inflation and soft demand. You add it together, shares currently down about 10%, Shanali.
Katie, I'm back to glass half full. I'm keeping an eye here on Spotify surging. After reporting subscriber growth that beat expectations, it also boosted profitability through those price increases and cost cutting. Spotify up almost 14% at the open.
And General Electric surging after reporting a jump in second quarter profit and raising its guidance for the full year. Let's get a closer look at Bloomberg's Abigail Doolittle. Abby?
Yeah, investors really liking this one, Matt. The stock up about 3.2%. And as you mentioned, they did beat profits, the estimates for the last quarter by 22%, putting up $1.20 in adjusted earnings. It was a mixed quarter, though. Revenues fell short by almost 3%. That was $8.2 billion. But investors doing what investors love to do, looking forward. They love the fact that the guidance for profits boosted on the full year. And this has everything to do with GE Aerospace, in particular their maintenance services. In addition, on the quarter that was, orders and free cash flow also growing by double digits. Now into today, this stock up about 60% on the year, which is really pretty incredible. Let's put this into the context of the overall industrials complex. Industrials on the year into today up just 11%. You can see tech, communications, those are the top sectors. Real estate, materials, the worst. All 11 sectors up right now. Industrials almost right there in the middle. GE, one of the stocks in that industrial complex, Matt, that's right at the top of the pack.
All right, awesome. Abigail, thank you very much for that. Abigail Doolittle, they're looking at GE for us. Joining us to talk about stocks and earnings, Tracy McMillian, head of global asset allocation strategy at the Wells Fargo Investment Institute. Industrials, one of the sectors that you favor, Tracy. What do you think out of the gate here?
Speaking of industrials, we think that there's going to be a broadening out of earnings away from just information technology and communication services like we've seen so far this year to sectors like industrials and materials and energy, areas of the market that have been somewhat ignored so far this year. And so we think that, some of the earnings out so far are very encouraging for that favorable rating.
Is that enough, though, to really keep the momentum behind this recent rotation that we've seen? You think about the small caps, by and large, just really taking the leadership baton over the past 2 weeks. That's paused a little bit, but that broadening out of earnings, could that revive it?
So we think that in terms of small cap companies, it's probably too early to be investing significantly in small caps. Small caps are responding to the potential for lower rates, and the surge that we saw in small cap prices really came at the same time that we saw that lower CPI print. So lower inflation means lower input costs, lower interest rates. Both of those are good for small caps, but we see signs that we're more late cycle, extended late cycle than early cycle. Small caps really start get a more sustainable rally at the beginning of a cycle, not late cycle. So we think it's probably too early.
Tracy, you think about the divergence that you're seeing in the stock market right now and some serious pain trades going on. When you look at UPS alone, it's dropping the most since October of 2008. If you think about any places that cost pressures are still a problem, where consumers are getting weaker, where are you the most concerned?
Yeah, we're most concerned with staples, in fact, because we think that as consumers do pull back and, the lower quintiles of the consumers are struggling as they pull back, that's going to result in less revenue for staples companies. And we think that margin pressures are going to continue in that space. We do think, though, that there are opportunities in financials and in healthcare. So a couple other sectors that we like away from some of those consumer sectors.
Yeah, I look at the consumer, and we've been worried for weeks or months now, Tracy, that people aren't, putting in pools anymore, that they're not buying Winnebagos. Today we see that, Polaris is having trouble selling off-road and marine equipment to those who need them. On the other hand, General Motors has sold over 100,000, Silverado pickup trucks, and those are just the light duty. They raised their full year forecast to as much as $15 billion in profit. So what's going on that the consumer can still buy cars right now?
Yeah, I saw that this morning. We're definitely getting some mixed signals there. I think what is happening is that the upper end of the consumer spectrum does still have the means to go out and purchase automobiles, to purchase those higher end products, especially if they're cash buyers, if they're not confronted with these higher interest rates. But they too seem to be paring back on non-essentials. So you could say that an automobile is an essential, maybe an ATV is not.
It's a good point, too. But even still, it feels like you can't really paint with a broad brushstroke here. We were talking about the difference between Coke and Pepsi. And of course, like Matt pointed out, they do have a slightly different product mix there. But still, you think about sort of this black and white earnings picture. What level of nuance do you need to have as you're reading through these earnings reports and trying to just prepare for what's to come?
That's a really good point. Yes, it does seem to be somewhat idiosyncratic, and different companies are executing more efficiently in this market. So, what we're really looking at are those higher quality companies that have cash on their balance sheets. They're not borrowing. They do have growing earnings, and during this earnings season, we're going to be watching both the past, so the earnings reports for this quarter, but more importantly, what they're saying about the coming quarters.
Tracy, how badly does this market need a rate cut? If you see signs of cooling, the market expects September. If we don't see September, what happens?
Well, I think markets are going to be very disappointed. There's almost 100% probability right now priced into the markets that there will be a September cut. So if we do not get that cut, we think markets will definitely be disappointed. But you also have to think about, why would we not get that cut? We might not get it if growth continues to be strong. If the labor market starts to surprise again to the downside, the downside in terms of fewer claims, the upside in terms of more people being hired. So if we see any of that transpire, that can neutralize some of the negativity from another postponement of a rate cut.
Tracy, we thank you so very much for your time. That is Tracy McMillian of the Wells Fargo Investment Institute. And coming up, Tesla out with their earnings today after the bell. We're going to preview what to expect next. Stick with us. This is Bloomberg.
This is Bloomberg Open Interest. You take a quick check on stocks right now. We're pretty much flat on the session. The S&P 500 not doing too much, of course, after yesterday's action, higher by about 0.1%. Let's get to our top calls, though. Some of the analyst action in focus this morning. And first up, Morgan Stanley raising Snap to equal weight. The analyst cites improving ad performance and says the stock's valuation versus its peers is more reasonable than it was earlier. Next up, we have Morgan Stanley cutting Under Armour to underweight. The firm says that internal survey results came in as neutral to negative and that Under Armour trailed most of its major sportswear peers in nearly every brand perception category. And finally, we have HSBC upgrading Krispy Kreme to a buy, saying that the sale of the company's majority stake in Insomnia Cookies helps it deleverage faster. Now, HSBC had expected a complete stake sale, but says that Krispy Kreme selling its majority stake and remaining a minority shareholder is, quote, still helpful, Matt.
Are you, do you eat Insomnia cookies?
Not a huge fan. I do love a Krispy Kreme, though.
Krispy Kreme is delicious.
Absolutely.
One stock to watch is Tesla, trading higher ahead of its earnings report due after the bell. Joining us now to talk about it is Ed Ludlow, co-host of Bloomberg Technology. He follows this company extremely closely and has been reporting on it for years. Ed, what do we expect from Tesla?
I think ultimately it just comes down to the forward-looking stuff. You know, for Wall Street, there's a lot of anxiety about the future of autonomous driving. And so in the first instance, we want a date for robotaxi. You'll remember that it had been scheduled for August 8th. Dana and I reported that it had been delayed until October, partly because Elon Musk had requested a design change for robotaxi, and partly because they wanted more time to have stuff to show for it. And 3 days after we reported that, Elon Musk posted on X, kind of indirectly confirming that he had made a design change request, and that more time meant they'd have more to show. So I think that's, in the first instance, what we're looking at. And then the question is, like, how did they do?
You know, it's interesting. While Tesla is a super interesting story right now, too, I also want to get your opinion here, Ed, on Alphabet, given that falling apart of the Wiz deal. How much did they need that to begin with?
Yeah, it's interesting. I mean, that's kind of two deals now where Alphabet's looked at M&A as an option and it's not really gone right for them. In the context of earnings, you know, just as with Amazon, I think you may have seen SAP out of Europe. It's all about cloud growth and tangibly how much cloud growth is being driven by AI or generative AI. So, you know, the Wiz deal was kind of seen as a value add, and I'm sure that Ruth Porat will get questions about it on the media call that she does, and that Sundar Pichai will get questions about it on the analyst call. But then everyone will look past that and go, okay, what's the cloud story along with the bread and butter search and advertising business?
And it was interesting. You saw a Dan Ives note come out from Wedbush, of course, and his take was that potentially this opens the door for Microsoft to make a cyber M&A play, sort of in optimistic shade to what's going on right now. But you think about all these antitrust concerns out there, this aggressive FTC. I mean, what does the M&A landscape in big tech look like right now? Would this even be possible?
As sure as the sun rises and sets, Dan Ives has put out a note on it. And I think that the idea was that after CrowdStrike, where Microsoft is basically the number one player on endpoint security, CrowdStrike's number two, and they're closely linked, of course, that there was an opportunity for someone to make some market share due to CrowdStrike's misfortune, put it that way. Interesting in our reporting, citing sources that, you know, the Wiz leadership and founders basically say, you know, we don't think that Alphabet can get this done. And I already look ahead to November in the presidential election, right? It's really worth reiterating that J.D. Vance is very firm and clear on the policy that he thinks big tech is too big, it should be broken up, and that antitrust will be an ongoing theme. If there's any common ground between the Trump ticket and the Biden administration as it currently stands going to Kamala Harris, it's that the FTC has done the right thing and they should be continued to empowered to do so. And so that's a psychological thing in any market.
I would ask for $1 billion breakup fee. And what about the IPO market? What's the vibe right now on the West Coast? Because clearly you haven't seen a lot of them getting done, and there doesn't seem to be that much appetite, although we just talked with Mark Lehman from JMP, and he said there's demand out there.
Well, I mean, one of the rationales for Wiz walking away from the offer from Alphabet was because they would rather do an IPO, and that's in part informed by a commitment from the management of that company to its staff, right? Many companies go public because they have long-serving staff with stock comp that they can only really get a benefit from if they list. One other example is Turo, that the CEO, Andre Haddad, was on the show with me very recently. He basically said, it's kind of not great still out there. The conditions aren't brilliant, and the election is a big factor going into November, so it's still for many a wait and see kind of mode. But the private markets give. They are willing to hand over cash, and so why go public and the process of that and sort of the requirements of that if private investors continue to back you at that growth stage? I think that's really interesting.
That's what I've been saying, Ed.
Of course you have. I got it from you.
Our thanks to Bloomberg's Ed Ludlow. Don't forget, you can follow Tesla results and our live blog today by typing TLIV GO on your Bloomberg terminal. Of course, a lot of eyeballs on that aftermarket. Now, coming up, JP Morgan's new investment banking heads are chasing market share. We're going to discuss that and more in our Wall Street Beat. This is Bloomberg.
Covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. We take a quick check on the stock market 20 minutes into the trading day. You can see the S&P 500 up about 0.2%. The NASDAQ 100 actually not leading right now. It had been, but currently, up only 0.1% or so. Meanwhile, the small caps, they were down and they're still down, but taking back some of those losses. The Russell 2000, your small caps, currently down by just 0.1%, Janali.
And Katie, it's time now for the Wall Street Beat, the most talked about stories in finance. First up, JP Morgan's new investment banking co-heads are looking to handle even more corporate cash flows, a mundane service that can open the door to lending and trading. In their first joint interview with Bloomberg News, the co-heads said they are also forging ahead in private and deploying artificial intelligence. Now, you have to remember, we're talking about Jennifer Pipsack here and Troy Rohrbaugh. Both of these people, guys, are seen as very significant successors to Jamie Dimon. They clocked a record amount of revenue in their division, a division that they bought together in a bid to compete more with Citigroup, actually. Remember, the division is already about 2 times the size of Goldman's headcount, just that division at JP Morgan alone.
Yeah, it's an interesting move here. Remember, this is one of, the biggest shakeups in quite a while. A real question, though. Jamie Dimon is 68. Is he going anywhere? We talk about succession all the time, but it seems like
Wait, because you think 68 is so young?
No, yeah, I kind of do.
Well, the interesting thing is he's stopped saying that 5 more years thing that he's always been saying. And it's interesting because with this investment banking division, you have to remember now it's giving them a chance not just to work with big companies around the world. They're doubling down on India and elsewhere, but also middle market companies. They are even expanding across America more than they are. Anyways, coming up next up, the IPO market is in focus. Wiz rejecting Alphabet's takeover bid. We've been talking about it. The cybersecurity startup will instead stick to its IPO plans. And talking more about investment banking here for a minute, because if you guys have seen that this is actually going to be one of the largest moments in IPOs since we saw last September when ARM finally lifted the gates.
You mean if they actually do it?
Yeah.
You're skeptical that they will. I think it's important to remember that if you turn down a huge offer like this, and it is double what they were valued at just in May this year, and say that we're going to IPO, that doesn't mean you're going to IPO this month or next month. It doesn't even mean that you're going to IPO this year or next year. It could be much further down the line because they have ways to get cash for long enough that they don't need to IPO in 24 or 25. And obviously the markets can change dramatically in that period of time.
And that's true of so many private companies right now that would be very good IPO candidates that would probably be very well received, but they don't really need to go public. I mean, what is the benefit other than being...
You know what? We are going to have a CEO on in the next hour, and I'm pretty sure that they intend to IPO within the next year or two.
What is her name?
So we can ask her, Natalie Gordon.
There we go.
We can talk to her about it, but also remember we have Lineage looking to go public. That is a nearly $4 billion IPO. We'll talk to those founders later this week as well. Let's see how it does because it could lift the gates. StubHub, remember they were planning an IPO. They're now waiting until later this summer. Klarna, we've been waiting for it for a long time. They finally are looking at those banks, according to the Financial Times. But again, there is friction getting out the door.
Yeah, absolutely. And waiting just seems to be the name of the game. It doesn't seem like they're beating on the walls of that pipeline.
Want to also end here on UPS, guys, because we have to take a look at that stock. Of course, very big cyclical stock that we're looking at here with a more than 11% drop. That is still the worst since we've seen in October 2008. And of course, this market has otherwise been a very strong market, but you never like to see those comparisons back to 2008. Of course, UPS...
Especially for a company like this, which
Absolutely.
is such a huge bellwether for the economy, right? It's not like Polaris, where if they're not selling a lot of razors, side-by-side vehicles, it doesn't matter because you don't need those, right? UPS is shipping the stuff that we need for commerce. Like, that shows you how the economy is running. And if they are having a problem, the economy is having a problem.
This isn't apples and apples at all, but I think about just how punishing the earnings misses have been. You think about UPS, you think about Nike a couple weeks ago, and then you think about CrowdStrike, which an outage brought down, the global financial system, and shares were punished, but not as mightily as we're seeing in UPS right now. It's just really an interesting way that investors are prioritizing right now.
By the way, Google, to go back to the Wiz story, right? They're offering $23 billion. CrowdStrike was selling for that in 2022. So it could get to a point where they could pick that up instead of Wiz.
You know, that's a very fascinating point. And the one thing we did ask Microsoft, for example, is how are they going to continue on their relationship with CrowdStrike after what happened? You've been reporting they might be testifying in front of Congress soon. And remember, UPS was actually one of the companies affected by CrowdStrike, but it was after the quarter. So we actually still don't really know the financial impact.
It's all tied together.
It's all tied together.
Shonali, let's take a look at the trading diary, the events you need to be watching today and this week. First off, obviously, we're going to get big tech earnings. Tesla and Alphabet, the owner of Google, reporting after the bell. We'll be paying very close attention. Definitely tune in to the close for that. Tomorrow, Israeli Prime Minister Benjamin Netanyahu addresses Congress. He was going to meet with President Biden today, but now he's not going to meet with President Biden today.
There.
Maybe later on in the week. Thursday, we're going to get U.S. GDP and durable goods numbers, so watch EcoGo for that. And especially on Friday, we get the inflation data. We're going to get PCE. This is Bloomberg. We are 30 minutes into the trading day. Markets have turned around. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld.
Coming up, earnings season kicks into high gear. It's been a mixed bag this morning, but next up, Tesla and Alphabet test EV and AI demand.
Politics remains in the spotlight. Kamala Harris's campaign picks up steam as endorsements and record-breaking donations pour in.
And from election risks to policy pivots, we'll survey the investment landscape with Guggenheim's Ann Walsh. But first, let's get a check on these markets. As Matt said, starting to perk up a little bit. You take a look at the S&P 500 rallying right now in the green. The S&P 500 up about 0.2%, actually outpacing big tech. The NASDAQ 100 just up about 0.1%. Meanwhile, the bond market pretty quiet right now. 10-year yields down about 2 basis points, so we are above 420.
That's an important level to watch. All right, we are getting some economic news right now. Take a look at EcoGo on your Bloomberg terminal, and you will see existing home sales, for example, coming at 3.89 million. We were looking for 3.98 million, so a little bit lower than expected, but probably more important than any of the eco data we're going to get from our eco screens is really the UPS earnings report.
Well, let's get right there because that's obviously one stock we are watching. UPS, the shares tumbling by the most since October 2008, a very, very bad time after reporting a profit well short of Wall Street's expectations. Joining us now with more is Lee Klasko. He is Bloomberg Intelligence Senior Logistics Analyst. Really appreciate you running to set for us. And let's talk about that superlative.
Nice set.
Worst day since October 2008. I know that they missed, but was it really that bad?
Well, I think the expectations going into the second quarter weren't great because everyone knew that there are a lot of headwinds facing the company, especially as it relates to its new labor agreement with the Teamsters, which anniversaries on August 1st. That being said, I think demand was not as good, and also UPS was apparently hit by a mix shift of lower yielding, lower profitable freight. They've definitely seen a trade down where someone that might have shipped something via air decided to go ground, and someone that was using ground, maybe they're using their SurePost, which is more of an economy type product, and all these products have lower yields, which definitely impacted the top line. I think sentiment is really low on UPS, which is, the old saying, it's darkest before the dawn. I think looking into the second half of the year, there are a lot of things that, could go UPS's way if demand, comes along. And that's a big if. And as you were talking earlier, it's all about, consumer demand and economic activity.
Lee, because there's such a big if baked in there, what do UPS's earnings say about everything else, given that there's such a bellwether here?
The good news is that their domestic operations, which is really, in the U.S., has seen volume growth inflect positively for the first time in about 10 quarters. That obviously to us is maybe telling us maybe the worst is over for them on the demand side. And then their international side, they noted that a number of their markets were starting to see growth again, especially as it relates to Asia. And again, these are, incremental net positives. The company, also increased its confidence by reinstating their share purchase program. They're going to buy back around $500 million in the second half of the year and maybe $1 billion next year. That's obviously a step in the right direction. Some of that is driven by, their plans to divest their brokerage business, which is called Coyote. RXO is going to buy that business. It's supposed to close at the end of the year, and that is expected to free up some cash, which they're probably using towards those buybacks. But the big kind of takeaway here is that margins are just not going to be as good as they originally thought, and some of that has to do with A, higher labor costs, and B, maybe the product mix is not where they thought it was going to be 3 or 6 months ago.
All right, Lee, thanks very much. Lee Klaskow there of Bloomberg Intelligence talking to us about UPS earnings missed, and the shares have been literally decimated. Now, earnings season is in full swing, and election risks are rising as well. Let's get some market perspective from Ann Walsh. She is the Chief Investment Officer at Guggenheim Partners Investment Management. She joins us here on set. Ann, great to have you in the studio. Thanks so much for coming. Let me first ask you about, it seems like what Lee was telling us is that UPS as a bellwether, the shipping volumes aren't as bad, right? It's a business, it's a margin problem that they're having. Having said that, I know you expect the economy to slow down. So what's your view on GDP and growth?
Well, thanks so much for having me here today. I'm so excited for the new format, so congratulations. It is interesting. We're a little bit more pessimistic, I guess would be the right word, with regard to where the economy is going. We think it's going to be a little bit slower than most of our peers in the industry believe. So looking for real GDP coming in second half of the year, moving into that 1.6 to say 1.89 level relative to about the 2% level that I think most of our peers are seeing and expecting. What we've really seen is a very bifurcated economy. There really are two economies in the U.S. right now. There's those with access to capital, those that are larger businesses, the wealth class, relative to the other part of the economy, which is small and mid-sized businesses, which make up 50% of the economy, and then also, income earners in the lower 50% bracket. And this is a very different economy between these two.
And so how does that bifurcated economy that you described work its way into the markets? Of course, against that backdrop, we've spoken to a lot of investors who say quality, quality, quality. Does that hold in the fixed income market as well?
Absolutely. And in fact, I think that's the place to be. I mean, after all, when the Fed started raising rates, they put the income back in fixed income. And so as a result, higher credit quality fixed income in particular at this juncture is a really good place to hang out. You're getting well paid for being in the more conservative end of the fixed income markets, and with little risk, I think, from spread widening. Fundamentals are very strong in corporate America, those that are in the capital markets, and even within high credit quality end of the high yield market, you can still get paid a very nice yield for not a lot of risk.
But what about the lower end? You see the leverage finance markets coming back. You see people coming to market with riskier deals, and the demand is insatiable. Do you think investors are ignoring a lot of the risk out there?
Well, again, in this bifurcated economy, those in the CCC rated category, for example, have probably the most risk. Profit margins, which is where we started, for example, with this conversation. I think that's going to be a problem potentially. Access to capital. We really don't talk a lot these days about the fact that the Fed's continuing its quantitative tightening. Liquidity has been very strong. Fiscal spending has been very strong. It's kept liquidity very high. As liquidity finally sort of recedes, as these long and variable lags take effect, that's going to be the part of the market that is the most susceptible.
And you said that the income is back in fixed income, and that's been true over the past several years. But when you think about a portfolio holistically, maybe the income is back, but is that sort of protection, that buffer, that diversification that bonds typically play in haven situations, is that back?
I believe it is. Frankly, the balance between the equity market relative to fixed income, I think that's an important place to be thinking about right now in this diversification. Equities have been very strong, obviously. The S&P 500 performance has been excellent, but it's also been highly concentrated. Lately, we've made a big deal in the markets with regard to the fact that there's been some broadening out, but there's still risk there. At the same risk that affects the CCC, particular part of the fixed income market, also affects the small and mid-sized businesses and that more broadened out market relative to the Magnificent Seven, for example. So I think that diversification benefit is definitely important, and that's why fixed income has an absolute role to play in a blended portfolio.
Well, double down there, because if the bigger companies, the large caps, have really been the comfortable place for so many investors to be. Does the fixed income story translate into the broadening? Do you buy that story for small and mid-sized companies, given the worries that some investors have about the profitability you're seeing there, the leverage, and the worry you've been mentioning about a slowing economy?
I think we have to realize something that's really happened differently in the U.S. capital markets over the last, say, decade, and that is the movement from a public market capital markets to a private market capital markets. And as a result, a lot of that risk has been shifted. Small and mid-sized borrowers are really reliant on banks, and banks are suffering more in this inverted yield curve environment and from this potential risk area from the very tight conditions that are existing with the Fed continuing to remain higher for longer.
Well, Ann, we are just getting started. You're sticking with us, but let's take a beat and take a look at what's moving underneath the markets right now. For more on the stocks that are making big moves today, we're joined now by our own Abigail Doolittle.
Well, at the top of the block, you, of course, were talking about GE. Let's take another look at it, up 5.63%. Of course, they put up that big earnings beat. They also raised for the full year on aerospace, the GE aerospace strength. To the downside, though, you were also talking about UPS down 12%, the worst day since 2008. They missed by about 10% on the top line. They also missed on the bottom line. It looks like they are seeing an unfortunate mix of weaker demand and rising costs. Let's take a look at what's really working, though, here, along with GE. Coca-Cola up 1%. They boosted on higher prices. Philip Morris up 2.7%. They also beat and were able to boost, and this has to do with smoke-free products. And then looking ahead, because we, of course, have some big earnings after the bell in the tech space, we have both Tesla and Alphabet reporting after the bell. Tesla right now down 1%, but this is ridiculous, Matt. And we looked at this chart a couple of weeks ago. This stock now almost a double from the April lows. So the pressure's on, will they deliver? And then Alphabet up about 0.6% ahead of their earnings report.
I will tell you, I was looking at all the car makers from September of 2022, and I put a chart together of, Porsche, and that's why I chose September of 2022 because they IPO'd then, versus Mercedes, BMW, Ford, General Motors, all of them, Stellantis. Porsche has underperformed every single one, but at least it's made gains. If you look at Tesla since September of 2022, by the way, I swear I made that chart. I swear I did.
We can't see it, but
I swear. If the control room wanted, they could probably pull it up right now. In any case, Tesla is down in that period. So at least all the other car makers.
Tesla's in a big range. It has a history of doing that. A very good trading vehicle. But if you went back to 2010, then how many thousands of percent is it up?
Of course. Yeah. That's a very good point. From zero, it looks a lot better. Abigail Doolittle, thanks very much for that. We'll show you that chart at some point eventually, I swear. Up next, much more with Ann Walsh of Guggenheim Partners Investment Management. And then later in our C-suite conversation, Babylist surpasses $400 billion in revenue. That's more than Wiz. We'll speak with Natalie Gordon, the CEO of Babylist, next. This is Bloomberg.
So in the days and weeks ahead, I, together with you, will do everything in my power to unite our Democratic Party, to unite our nation, and to win this election.
And that was Vice President Kamala Harris speaking last night at a campaign event to staffers in Wilmington, Delaware. Now she's hitting the campaign trail in earnest today and is scheduled to speak in Milwaukee in just a bit. Joining us now is David Gura. He is host of Bloomberg's Big Take podcast. And we do have a headline from ABC News crossing in the last couple minutes that Josh Shapiro, Mark Kelly right now are leading for potential VP picks for Kamala Harris. Who's in pole position right now? Who are people talking about as potentials here?
This is a very governor-heavy list. You mentioned Josh Shapiro of Pennsylvania. He is certainly high up on there. Roy Cooper of my home state of North Carolina is another one. Andy Beshear of Kentucky. Gretchen Whitmer of Michigan took herself out of the running yesterday. She spoke to a local affiliate of CBS in Michigan and said she's not interested in leaving her home state to become the vice president. We do know now that Eric Holder, the former attorney general, who's now a partner at Covington & Burling, the big white shoe law firm in D.C., is going to be helping the campaign lead that search. So we have a few weeks here. It feels like things have moved at a very quick pace, a very fast momentum. But just remember, Donald Trump didn't pick his running mate until the first day of the Republican National Convention. We're still a few weeks out from Chicago, Katie, and that's, of course, when Kamala Harris, should she be the nominee, could pick her running mate at the convention as well.
It would be, I think, it would be amazing, obviously, if two women were on the ticket. And also very cool, a lot of people have floated Republican names even, like Cheney or Romney, but obviously it's unlikely to happen. Doesn't she really need like a white Christian male as her running mate, just for the demographics?
Several of the names on this list are of the demographic you just described, white Christian males. I think that the party is taking this moment to kind of reset. I've been thinking a lot about the debate that I covered in Atlanta and how that was seen as this reset moment for certainly the Biden campaign to get this election, to get this campaign kind of kick-started in a new way. I think that's how Democrats are viewing this moment, and I think there is an impulse, Matt, in this campaign to see this as a way to, yes, kickstart things, but also turn a corner, look to perhaps younger people who might be on that ticket. Again, I think this is what they're going to be debating here in the coming days as Kamala Harris, yes, meets with that team in Wilmington, Delaware, and then hits the campaign trail in earnest.
David Gura, thanks for joining us. Of course, David Gura of The Big Take. You can listen to David's podcast on Apple Podcasts, Spotify, or wherever you get your podcasts. We're now going to welcome back Ann Walsh, CIO of Guggenheim Partners Investment Management, to talk more about what the political ramifications here are for the markets. And there are a lot of worries that if Trump were to take office, then there could be an inflationary force under the market. Do you share that view? Can yields actually be rising into next year, not falling?
So, if we just take one step back for a second and just think about the gravity of where we are in history, we are awash in what I would refer to as gray swans. We had former President Trump shot at in an assassination attempt. We've had the current leading contender for the Democrat Party, current President Biden, step back. This is an unprecedented time. And in an otherwise larger backdrop, if you will, of all sorts of other unprecedented economic milestones that we've seen. A huge amount of fiscal spending in a very low unemployment world, tightening by the Fed. All of this is going on, and now we have, of course, the volatility made worse by the question of policies. So to your question with regard to where we are in the risk of inflation, quite clearly the bond market thinks so, that there's a risk of inflation and these policies being inflationary, because we've seen a bear steepener. And so as a result, I think the market is perceiving additional risks. I'm not entirely sure that I'm convinced that it's because of inflation fears. I think it's just because of the sheer amount of volume that we have to see get placed into the markets in the Treasury space. And what we're seeing is a bit of a sell-off in advance of expectations of more Treasury issuance. We'll keep on with the spigots are still on in Washington. We're still seeing fiscal spending, and that's still going to continue.
Kathy Jones of Charles Schwab made a great point on our weekend special, because to your point, there's been a lot of history happening. But on that weekend special, she said when it comes to politics, short term, it doesn't matter, but long term, it does. When you think about some of the potential policies that are being floated right now. And to that point, I'm wondering how you're thinking about it as an investor. We talk about the steepener, the flattener, some of these one-off moves that we're seeing. But long term, how are you thinking about actually putting this into a portfolio?
Well, so in the what I call the intermediate term, I think that probably the more important information is still coming from inflation coming down and our expectation that it will continue to decline. And I think we're going to see the core PCE in line with expectations, maybe coming in better, and by the end of this year, substantially better, relatively speaking, and a little better than our peers are expecting. And then at the same time, we see GDP slowing, we see unemployment rising a bit. So in the intermediate term, I think that Fed policy is really going to drive the markets, at least in the fixed income space, and obviously earnings and the potential slowdown in the S&P 500 and the equity markets. Moving forward beyond that, I think the number one thing I'm looking at is tax policy. And if Trump were to win again, I think we'd see deregulation again as part of an impetus there. But as far as international foreign policy, obviously tariffs, I think that will have a moving effect on the markets as well. But I think taxes and deregulation on the one side, I think both parties are going to continue to spend.
Yes.
And we're going to continue to see fiscal spending, and that's going to continue to have an impact on how much Treasury issuance we're going to see.
Does that, I've been doing this job at Bloomberg here for 25 years, and every few years somebody freaks out about the deficit and the national debt, right? It's massive, I realize, and we're making interest payments now of more than $100 billion a month. We're spending far more on our debt than we do on our military at this point. However, no one seems to care. I mean, we talked to...
Steve Eisman does not
Steve
care.
Eisman doesn't care. I talked to Ed Hyman. He doesn't really care. I mean, not because he doesn't care, but because the Treasury market's not freaking out. The dollar is still strong. Does it matter?
It matters. I think, however, the markets have digested it as a news element and as part of the backdrop. And so far, the sustainability of the debt payments hasn't been called into question. We've had a few bobbles with regard to rating agencies and the like, but the truth is that as long as the markets appear to feel that it's stable, then this becomes a non-event. And that's why these other participants are saying, yeah, don't worry, nothing to see here, don't look.
Even Gary Schilling doesn't care.
Well, listen, though, at one point, though, you mentioned the spigot still on in the Treasury market. People are soaking up the issuance so far. It's been on the shorter end of the curve for the most part here. At what point does that spigot start to close, or at least start to move towards being more closed?
Well, I think one of the other false narratives has been that our international friends have stopped buying our treasuries. That's not true. They are still buying. And as long as there remains an appetite for treasuries, and as long as the U.S. dollar is the reserve currency, then it appears that we get to that world of what I call stability. It's not optimal, but it's stable. And so for the time being, as long as that's the backdrop, I don't see a whole lot of change.
And I do want to talk about a little bit more in your CIO role. We're talking about Treasury issuance. Of course, a lot of issuance at the short end of the curve. That's been met by very, very robust demand, if you want to call it that, $6 trillion in money market funds. How are you thinking about cash right now, especially with yields at 5% and change?
Well, I think that cash is very attractive for many investors. There's still $6 trillion sitting on the sidelines, ready to be redeployed into some other part of the market when the opportunity is right. But at 5%-ish, it's very attractive to sit there with no risk and yet get that kind of return. And if you compare that to pre-COVID and the years post-financial crisis, that's extremely attractive relative to history.
And of those gray swans that you started off talking about today, which are you most concerned about?
I'm concerned about the fact that we have a unique set of dynamics that are going on in the economy right now that we're not accustomed to seeing. Normally, with this timeline, we'd have seen the Fed's actions really slow down the economy. We'd see unemployment rising. We definitely have already seen the kind of economy reaction that we would have otherwise. But because of fiscal spending, because of these strange cross currents that we're getting, it's creating a level of volatility that's almost unprecedented, particularly in fixed income markets, and relative to the VIX, for example, which has been for the most part pretty benign. And I think it's this uncertainty that is relative to history. As investors, we tend to look for patterns. And what we're seeing this time around is very few of the same patterns. And it makes it very challenging to look forward and prognosticate what's going to happen. As we like to say, it makes that crystal ball very cloudy. And I think that's one of the most challenging things about being an investor right now is the lack of paradigm or pattern that we're used to seeing.
And really enjoyed this conversation. Great to have you on set and spend so much time with us. Our thanks, of course, to Ann Walsh. She is Guggenheim Partners Investment Management CIO. Meanwhile, let's get a check on these markets again, specifically on some of the earnings moves, because there are quite a lot of them. We have to start with UPS, just absolutely cratering right now. Shares down about 12%. At one point, the worst day since October 2008. Matt Miller remembers those days very well, and not a superlative you want to see.
Yeah, no, absolutely not. That was a very bad time for stocks. The interesting thing, I think, is that Lee Klaskow told us it's not so much about package volume, which would be really worrying for the economy, but about the margins at UPS. Are people going to go in and pay $75 to have them pack a box for you? Are you using their copiers?
And glass half empty, so to speak. Those gains in Coca-Cola actually carrying only up about 0.7% now after
that's
very
right.
strong earnings.
Although the indexes are still up, right? The S&P 500 up 0.25% right now. The NASDAQ up 1/3 of 1%.
On Bloomberg.
One of the pieces of data we're looking at today, U.S. existing home sales fell in June to one of the slowest paces since 2010. Sellers are waiting for mortgage rates to fall further, and buyers are balking at stubbornly high prices. But I want to take a closer look at households in America and how consumers are doing in today's C-Suite conversation. Babylist is a platform that helps families with products and services across commerce, media, and healthcare. The company has surpassed $400 million in revenue for the first time. And joining us to talk about it is the CEO and founder, Natalie Gordon. Natalie, great to have you on the program. Thanks for joining us. Let's talk first about the kind of growth that you're seeing. I mean, the company has been very popular, and I guess, you know, as Americans, we're still having a lot of babies. I'm doing my part, at least. Talk to me about how the growth looks from your point of view.
Yeah, people are continuing to have Babylist, and I love to hear that you are actually a user. Last year, 9 million people actually gave a gift from Babylist, and the platform itself drove over $1 billion of GMV. And so we really have this interesting vantage point on this moment in time that millions of Americans are going through every year.
And we do have some breaking news that I want to mention just now. A headline crossing the terminal. The Secret Service Director, Kim Cheadle, has resigned. This is according to reporting from ABC News, of course, testifying yesterday in front of Congress and resigning today. That's the Secret Service Director. Kim Cheadle has resigned. Of course, a lot of scrutiny and criticism of the Secret Service following Donald Trump's assassination attempt. We'll continue to follow that story and bring you updates as we have it. But I want to go back to you, Natalie, because you think about how people shop right now, and especially coming out of the pandemic, it's in so many people's muscle memories to just go to Amazon.com for basically everything, from furniture to groceries, etc. How do you compete?
When you are having a baby, you make 1,700 decisions. And I think when you think about where's the right starting point, Babylist is that starting point. Everything we do is for someone who's going through this experience, most often for the very first time. Our millions of users are visiting us every single day during this time period to help them figure out what stuff they need, and then also to just help them make other decisions that aren't just the products.
Speaking of other decisions here, we're still sitting in an era where many Americans are really dealing with the weight of inflation, which is even harder when you have multiple mouths to feed. Babies are expensive. Natalie, how do you help clients deal with this issue?
Yeah, we're seeing very contradictory behavior with our users as they're going through this life stage. They are really trying to save money, and Babylist is the best place to help them do that. So they're asking for cash, for diapers, for other essentials, often like to help with parental leave. We're also seeing them actually price up. And so we call it parent math. They'll say, okay, I will spend really like up to $1,000 for this product if I can use it for many, many years, or if it'll actually really solve one of those problems, give me back time, help me sleep, give me peace of mind.
How has, by the way, I just came back from 6 months of parental leave, so I definitely spent a lot of time on your website. How has the funding been, Natalie? I mean, you've grown now so much, but how many rounds have you gone through? How was it to get funding? How is it to be a startup in this environment?
Yeah, I founded Babylist 13 years ago. I now have a 13-year-old, and we've reached the scale we have, raising less than $50 million. And the majority of that was in our Series C at the end of 2021. And so we've really grown in this very sustainable way, being mostly profitable every year, really self-funding our growth. I think at a time when that was not what other companies were doing. And now what we're really seeing is other companies trying to catch up to where we are, where we have this sustainable, growing business where the financials actually work.
We've been talking a lot today about IPOs because of a completely unrelated story to Babylist, but do you have plans to go public, and what are you looking for in the market to get you there?
Yeah, I think no path for us is out of the picture. we're very committed to being a profitable, growing company that's independent, and that could be a path we look at.
Well, when you talk to investors, let me ask it this way, Natalie. Do you think that there's demand to go public in this market?
I think there's demand for some companies right now. I think the companies that are going public are very attractive and look like are a much better financial profile than companies that were going public a couple of years ago. I do think the markets are opening.
Natalie, can you talk to us a little bit about a point that you were making a little earlier about maternity leave, people looking for more ways to find...
Or paternity leave.
Well, that's actually was my question. Parental leave. Are more people taking paternity leave as well? What are working mothers doing to kind of find more support in their household?
Yeah. Parents... it's such an important time to be able to spend with your baby those first couple of months. America actually, parents take less leave than almost every other country. I do think there is such an impact when fathers do take paternity leave into how they show up during that time period, but it's also shown after that time period, they actually are able to show up as confident and better dads by spending that time and not just leaving it to the new mom. I think it's a promising trend.
All right, Natalie, really enjoyed this conversation. Hope to keep it going again soon. That, of course, is Natalie Gordon of Babylist. Now, we do want to turn to another company that we're keeping an eye on, and that's General Electric, because shares rising after the company raised its full-year profit forecast after a second quarter that beat expectations. Now, earlier, Larry Culp sat down for an exclusive interview with Bloomberg's Guy Johnson. Let's take a listen.
If you look at our order book in the second quarter alone, nearly 40% year over year. We see our utilization of the fleets, both the mature fleet, which we power with the CFM56. Yep. That has been steady, an engine that folks thought might begin to fade. Our newer generation technology, the LEAP engine on both the 737 MAX and the Neo at Airbus, that's probably up 4 points in terms of share. So our utilization could not be higher. Even just looking at the third quarter here, we have probably 90% of our third quarter projection in backlog today with respect to parts. So in terms of the demand signals we're seeing from our customers, things are strong.
So the hours being flown are going to remain consistent, you think?
We believe so. Okay. And going forward, they're going to increase.
That's the kind of the older story. That's the existing fleet that's already out there. As you say, the maintenance story is very strong. The margin off that is very, very strong. The story certainly at the Farnborough Air Show and all the air shows recently and throughout this industry has been what has been happening with the supply chain. Airbus lowering its guidance for the year, talking about engines within that guidance. Is the supply chain story getting better or is it getting worse?
Guy, I'm strongly of the view it's getting better. It's really all about the rate of improvement.
Right.
And what we shared earlier today with investors is that we didn't have the output that we had anticipated in the second quarter with our newest generation engine in particular, with our LEAP engine. But we're going in using our flight deck, our lean operating model to help our suppliers help us. Jointly problem solving, really understanding constraints at the point of impact. And we saw tremendous results from that in the second quarter. Didn't translate into as many deliveries perhaps as our airframer customers would have liked, but we saw 2/3 of the suppliers that we worked with improve their output to us by nearly twofold. So that's encouraging.
Just kind of talk me through what's happening. So originally the guidance was for a 25% improvement for that engine. Then you went, I think it was in April, you were kind of 10-15. Now you're at kind of flat to 5.
Exactly.
That feels like it's not getting better. You're telling me that it is, though below the surface, getting better.
It's not getting better at the rate that we had anticipated, but it's getting better if you look at the sequential trends. And that, from an operating perspective, that's all that really matters.
That was General Electric CEO Larry Culp speaking earlier this morning in England. More now, though, on that breaking news. The Associated Press now saying Secret Service Director Kimberly Cheadle has resigned after an assassination attempt against former President Trump. Joining us now is Bloomberg's Jordan Fabian in Washington. And we know the director had addressed Congress about a day ago, and she did refuse to disclose many specifics about that July 13th shooting. Jordan, how do we get here? What comes next?
Well, look, she'd already lost confidence in a lot of people on Capitol Hill and in the administration before that hearing, and her privacy, her lack of disclosure really angered a lot of Republicans and Democrats. You saw James Comer, the chairman of that committee, who's a Republican, and Jamie Raskin, the ranking Democrat, who don't agree on anything, come out with a joint statement yesterday calling for her resignation. So at that point, it seemed like a fait accompli that she would be out of a job.
Yeah, and of course, we are seeing the culmination of that today. Tell us a little bit about what we heard yesterday, though, that testimony that she gave, because the reception and reaction from lawmakers was pretty brutal, Jordan.
Right. She was asked a range of questions about the agency's preparation for that event, securing the area, also questions about the size and scope of the detail protecting former President Trump. And she didn't really give any substantial answers to those, basically saying that, they proceed with the plan they had. And that wasn't satisfactory to members. You had members from, Rashida Tlaib to James Comer going after him or going after her, excuse me. And that just further dug a hole for herself in terms of public credibility.
I got to say, to me, this is the least surprising piece of news that I've seen in recent memory. Has there been a bigger failure by the Secret Service in your lifetime, Jordan? I mean, I would say that this is far worse than the assassination attempt on Ronald Reagan.
It's certainly the biggest in my lifetime, but it's important to remember it's not the first failure in the last decade when it comes to that agency. There was a scandal involving agents soliciting prostitutes in Colombia in 2012 before President Obama's trip to that country. And there was the famous incident a couple of years later where a man jumped the fence and was able to enter the White House through the front door. There was another incident where a man got onto the grounds while President Trump at the time was in office and was able to roam around. So this is an agency that has been plagued by problems for years. And unfortunately, it culminated in this utter failure at that rally on July 13th.
Jordan, we thank you so much for your time. Absolutely encyclopedic. That is Bloomberg's Jordan Fabian in Washington. Now coming up, what a trip across the country along the Lincoln Highway tells us about the 2024 election issues. Bloomberg opinion columnist Frank Berry talks about his new book. Next, this is Bloomberg.
It's time now for our daily Wall Street Week conversation. And the 2024 presidential election has taken unprecedented turns, but the issues really have been around for decades. That's what Bloomberg opinion columnist Frank Berry explores in his new book, Backroads and Better Angels. He sat down with Wall Street Week's David Weston to talk about why he traveled along the Lincoln Highway to write his new book.
In 2016, when the country seemed to be coming apart at the seams and lots of people were getting angry about Trump and Clinton and the race, I wanted a different way into the story. And while everyone else was exploring what is dividing us and what's polarizing us and trying to explain red America to blue America, I wanted to explore what holds the country together. And what better way to do it than, as I learned, there's this thing called the Lincoln Highway. And I thought, what a great way to explore what holds the country together by following the spirit of Lincoln along the Lincoln Highway.
And connecting Lincoln with Better Angels in the title here, which was in his first inaugural address, actually, at a time when the country was deeply divided, goodness knows, we were going to war with ourselves. So what did you find really pulled us together?
Well, I asked that question, in fact, to every person that we met along the way. The Lincoln Highway runs from New York to San Francisco, and I asked people all along the route, what holds us together as a country? And I heard lots of different answers, as you might imagine. People talked about the Constitution, they talked about freedom, they talked about love of country, they talked about neighbors. But of course, it does run deeper than that, and that's why Lincoln is so important to the story. And in fact, at a time when immigration is such a divisive issue, one of the things that Lincoln said holds us together is this idea that he calls the electric cord. He talked about how whether your ancestors came here on the Mayflower or you arrived here yesterday as an immigrant, it's the promise in the Declaration of Independence that he calls the electric cord that holds us together as a people. And I think that's something that's important to remember too. We're not a nation founded on a particular nationality or religion or language. We're founded on an idea, and it's that promise of freedom and equality.
You undertook this 7-month, I think, voyage in a Winnebago,
That's
if I'm
right.
not mistaken, with your wife.
That's right.
When we were still in a pandemic lockdown.
Yes.
It was an interesting time for the country, actually, and in a presidential election in 2020 at the same time.
That's right.
So were there forces pulling us together at that point? Because it was really a tough time for the country.
It was an incredibly tough time. We had, as you say, the pandemic, we had the election, and we also had the wake of the George Floyd protests. So there was an awful lot going on, and one of the things that we heard from people all along the route, whether they were Democrats or Republicans, was a real frustration about how divided we were. And people had different, they blamed different sides for that, but there was also a sense of frustration about how difficult it was going to be to overcome it, but also this sense of resilience that we've been through difficult things before, and that somehow, some way, America always finds a way to get past it.
You served with Mike Bloomberg, our majority owner,
Yes.
founder, right, when he was mayor. And it does strike me there's a difference between the local and the national. We have a tendency in the media to focus on the national, where in fact, we're actually a country of a lot of cities and states, each of which is different from one another. Did you see a difference in the attitude toward unity with respect to cities and localities and communities versus what we see in Washington, D.C.?
Yeah, absolutely. And that was one of the things I wanted to do with the book, was to step out of the 2020 election campaign, to really leave Trump and Biden behind for the most part, and to talk with people about national issues, but from a local and personal perspective. And that allowed for a much, I think, healthier and instructive dialogue, because, you know, the old Tip O'Neill line that all politics is local is a good thing. When people can talk about their local schools and their community, it keeps it away from the kind of most vitriolic aspects of partisan dialogue.
What did you learn from this extraordinary voyage with your wife that might be applicable today? We're in another presidential election now, and we have candidates, national candidates, who talk about unity, pulling us together, but often the way they run, the way they position themselves does not tend to pull us together. It tends to be more divisive. It looks like a lot of politicians have decided the way to get elected is by being divisive rather than unifying.
I think that's very true, and candidates run to the extremes because that's where the votes are often in a primary. But one of the things that we took away from the trip, from conversation after conversation, was a sense from people that there's more to the middle than the politicians in Washington are recognizing and acting on. And so one quick story. after we ended the Lincoln Highway, we traveled down on our way home on a southern route, and we went to the southern border. And I met with the deputy sheriff there, and I did a ride along of the border in southeastern Arizona, and we saw the wall being built. And the sheriff had said to me, you know, we know that the wall is not the answer to everything here. It's not the end-all and be-all. We need a balanced security plan. We need more staffing. We need more cameras. We need more technology. And he said, we also need to make it easier for people to come here. He said, we need a balanced, progressive immigration reform plan. And he blamed both parties for not delivering it. And that's from a sheriff on the border. And I think if you spoke with most people in the country, whether they're Democrats or Republicans, they would say, yes, we do need all of those things. We got to be able to secure the border, but we need to make it easier for people to come here, and that requires immigration reform. And that's something we've been arguing about for 20 years without Washington really acting on it.
That, of course, is Bloomberg Opinion's Frank Berry. He is the author of the new book, Backroads and Better Angels. Now, tomorrow, we continue the conversation about what Vice President Harris's policies could mean for the economy with former U.S. Treasury Secretary Larry Summers. And we do have some breaking news right now, and that is Biden's speech on withdrawing from the campaign, from the race. That is set for tomorrow. That is according to reporting from the Washington Post. Of course, we are expecting to hear from Harris later today in Milwaukee. And now we've learned, of course, from the Washington Post that Biden speech on withdrawing from the race is set for tomorrow.
So we'll see him.
We will see him finally. Of course, we haven't seen him publicly in several days at this point, not since he did announce that he was withdrawing, but
on Twitter,
on X.
Yeah.
Yeah. But
can you do that? Can you call it X?
You can.
When you're just in general in conversation, do you say, oh, I was looking at X?
I think you have to now because that's what it's called.
I still call it Twitter.
I think we can do whatever we want. But what we know, of course, is that we will hear from Biden tomorrow. We'll continue to follow that story. This is Bloomberg.
All right, a lot of talk about earnings today. General Motors was one that caught my eye with profit up 60%, beating Wall Street's estimates and raising its full-year forecast. I thought, let me look at the stock compared to Porsche, because yesterday Porsche, obviously trading in Germany, not here in the U.S., came out with a real disappointment. Those shares are down. Porsche, if you remember, was IPO'd out of Volkswagen back in September of 2022. So I looked at all of the major car makers ex-Tesla, because Tesla is actually down in this time period, versus Porsche since the IPO. It's amazing how badly Porsche, which arguably makes the best cars of anybody on this list, has underperformed.
Yeah, it is pretty stark. I bet that Porsche wishes that you had put Tesla on that chart as well, because that is pretty shocking. Shocking that they've done so poorly relatively, but also that Stellantis, BMW, Mercedes have done so well.
Can you explain to me why everyone in America is buying a truck?
Well, I will tell you, because of the incredible luxury and versatility that you get with the pickup truck. If you look across any vehicle right now, I would probably choose a Silverado 2500 ZR2 with the big diesel, because I could fit my whole family in there and I could take as much stuff as I want in the back.
All right, well, this was Bloomberg Open Interest. We'll see you tomorrow. This is Bloomberg.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from London and San Francisco, this is Bloomberg Technology. Coming up, the first of the Magnificent Seven gear up to report results. We've got you covered.
Plus, Wiz walks away from Google's $23 billion offer. Details ahead.
And we bring you our exclusive interview with Meta CEO Mark Zuckerberg. But first, we're checking on these markets, and Ed, it is a fight to stay in the green that the NASDAQ 100 is currently losing. We're off by about 0.1% as we speak. The NASDAQ, the bigger benchmark of more inclusive names, is actually still in the green. But more broadly, we are seeing some weakness from a number of the earnings that have just come, and indeed some that we anticipate, Ed, and that's what you're watching.
Yeah, Spotify up 12% in the session. Subscribers, paid subscribers, up 12% year on year. There's a lot of focus from the street on all of the cost-saving measures that they took and the bottom line. But let's stick with the Spotify story. The company releasing those 2Q earnings this morning and bringing Bloomberg's Lucas Shaw. Lucas leads Screen Time, which is our coverage of the entertainment industry and all things streaming. And Lucas, we are so back. Streaming is back. Talk me through Spotify.
Yeah, both Netflix and Spotify having very good earnings. Look, Spotify is finally starting to look like a profitable business. I think that's what investors are excited about. They had both profit and margin that was ahead of expectations, I believe. And perhaps most notably for them, they raised prices and still beat on their premium subscriber edition. So it feels like their ability to raise prices now and going forward will be very strong, which is good news for everyone looking at it. No, they've done what Wall Street wanted, which is cut costs and start delivering profits.
And they have really focused in on the profitability over and above, perhaps more broadly, just subscriber growth in totality, Lucas. There was a little bit of weakness on the bigger, larger number of those that aren't just paying premium.
Yeah, I mean, I've been surprised over the last couple of years at their ability to continue to grow their customer base, not just premium, but the free. They've had a lot of success in India and Southeast Asia, which is, I think, part of how they've done it. But they've reined in the spending on podcasting. They are investing a fair amount in audiobooks, and I think there's some skepticism still as to how exactly that will sort itself out. But it's a company and it's a product that people really like. They are not canceling. Spotify has pricing power. And I think that, though there have been concerns about how that business would look, it's starting to feel like a company that investors can rely on.
Lucas, this might be a little out of left field, but I'm still really focused on podcasts. I just find the industry to be so vibrant. If you track the news flow, a lot of like individual names doing licensing deals for themselves, their own properties. Spotify, do they have anything to say about that?
Well, look, Spotify is now content to be a sort of neutral distributor of podcasts, right? They spent a bunch of money buying podcast networks, funding originals, kind of securing exclusive rights to shows because they use those podcasts and those deals to bring people in and to get people listening to podcasts on Spotify. That is now happening. Spotify feels less of a need to pay for people and feels like it can, just benefit from ad sales from shows that it doesn't control or pay for.
It's a Swedish juggernaut, Lucas Shaw. We so appreciate you bringing us all things Spotify. Meanwhile, sticking with results out of Europe, and it's SAP. CEO Christian Klein joined Bloomberg to weigh in on his company's results. Just take a listen.
We are not only focusing on moving customers to the cloud. We look into their business model transformation. So when you talk about SAP, it's all about how can you actually grow your business. I mean, take ExxonMobil, one of our largest customers now in the cloud. They are moving towards renewable energies, and our software is key for that. Or when you talk about resiliency of supply chains, we infuse AI. We are connecting your supply chain with the operations of thousands of your suppliers. And that's why SAP is so relevant these days.
Let's bring in Bloomberg's Sonia in for more on this. And Sonia, shares at a record high. Is it all about AI?
Yes, AI definitely plays a key role in SAP's financial performance and business development. We've seen some good growth on the cloud revenue, and also the backlog seems very healthy. So we can expect a lot more of the growth to come later this year and in the coming months. As the AI had a significant role in attracting new customers, as well as incentivizing the shift from the on-premise solution to the more lucrative cloud business.
Bloomberg's Sonia Wind out of Europe. Thank you very much. Another tech company that's reporting today is Tesla. Let's discuss what to expect with Junheng Lee, Warren Capital CEO and head of research, and getting myself organized, putting my posts in for the blog that will run later today. And I think a big focus is going to be FSD, Junheng. You've got a particularly interesting view on that. Why are you watching FSD so closely?
Because the car sale data are very transparent, and it's obvious that the car sales has hit a wall, whether in California, in China, in Europe. So in California, the data are very transparent. Sales down 20% 24% year over year in Q2, and California being 25% of the U.S. EV sales. And in China, it's down 7%. That's on top of very aggressive promotions. In Europe, it's a different story. There's a tariff coming up. Now, the Chinese-made car going to Europe starting this month will face 20% increase in tariff. So at this cross current, Tesla all of a sudden pivoted its story from EV sales to FSD. Essentially, FSD is a story of, okay, you buy a car, I give you a driver. So that's supposed to be a differentiation for Tesla car to get more share in the market. But it is our view, after speaking extensively to the researchers in the field, as well as the competition's AI effort, that it's a very immature product. It takes time to get higher quality data, probably a rework of the underlying narrow AI system, and waiting for more GPU cluster for this to work.
Full self-driving has actually been something both Ed and I have been playing with a lot, lucky enough to be able to do so. But why do you think the underlying technology, the overall scale of investment that Tesla needs to make is so much larger than the market is factoring in? Because this is always the long-term bet, that Tesla is an AI play.
Yep, because Tesla's AI vision is a little bit different from everyone else. Everyone else in the industry relies on sensors in addition to the underlying AI software. But Tesla wants to differentiate itself as a unique play in autonomous AI. Therefore, it markets as end-to-end vision only AI play. But if you talk to people in the area, they'll tell you that it's a very difficult route because it needs a lot more extensive data input, and it requires a much more extensive AI system to truly get you to L5. So now you have this very big operation domain design, and you have limited hardware tool, but you want to achieve L5. So that's a very, very tall order.
Speaking of hardware, we were just showing some of the things that are top of mind for retail investors, right? They have a platform, say.com. They can vote or upvote their questions. What's missing from that is robo-taxi. How critical is it that Elon Musk gives us a new date for the robo-taxi unveil?
Well, robo-taxi, it's just one manifestation of its vision-only E2E, autonomous AI. But robo-taxi, in fact, is easier to achieve than FSD because there's no one behind the wheel. So in terms of the legal liability, it's much crystal clear. So if robo-taxi gets into trouble, it's Tesla that's going to fully compensate and financially, legally responsible for the accident. As opposed to FSD, as long as it's not fully autonomous and the Tesla doesn't claim 100% legal responsibilities, it's the insurance company needs to underwrite that risk. That's why you see lots of Waymos on the street in selective cities, but there's no Tesla robo-taxi because it requires a different sort of like hardware, software, and AI program integration. Tesla doesn't have that.
We're used to perhaps being patient on Elon's promises. He's pushed back robo-taxi, he pushed back Optimus just in the last day or so. Does that matter in the longer term if we are seeing a vision of AI? Look, this is also an energy company that does relatively well.
Well, sure, energy does extremely well, but energy is not something you give it 100 times price to earning ratio, right? So, I mean, the stock is at 250. The company is supposed to make $2.50 this year. So effectively, you are giving it 110 price to earning ratio. Okay, so FSD story will get this to, where the company, where Elon Musk wants the stock to go. So the math is this. So FSD will allow the penetration to go up to 30% of all cars sold in the U.S. So U.S. sells about 18 million cars. So that gives you 6 million cars for Tesla, because it's give you a car, give you a driver. So people will buy it for $45,000. And then the company makes 10% profit margin. And you give 30 times price to earning to that kind of a run rate normalized earning, just like you give to Apple. That gives you $2 trillion valuation. That's the story they want to tell to the investor base and pacify them. It might be true, it might not be true. And it might be someone else get there first, and Tesla is not. But if you give it 20% probability, that gives you significantly less market valuation than $2 trillion.
Well said, Junhang Li, Warren Capital CEO and head of research, as we try to vindicate that 93 times future earnings that is the valuation of Tesla. Look at what's happening with Alphabet, because it's not just Tesla out after the bell. Google's parent company is as well. We're up 0.5%. Not only are we focusing on search, cloud and AI, we're also thinking about the Wiz rejection of Google's $23 billion offer. We're going to be talking about that later in the show as well, Ed.
All right, coming up, we bring in Bloomberg's Emily Chang for more on that exclusive interview with Meta CEO and founder Mark Zuckerberg. That's next. This is Bloomberg Technology.
Today, Meta unveiled the largest open source AI model ever, Llama 3.1. The company is also updating its Meta AI service, like it's being billed as a rival to ChatGPT. In an exclusive interview with Bloomberg's Emily Chang, Meta CEO and founder Mark Zuckerberg opened up about his strategy and why he believes it's superior to competitors like OpenAI and Google. Just take a listen.
So you're releasing Llama 3.1, this family of models, big and small, including the biggest open source model ever, 405 billion parameters. What does that jump unlock?
I actually think the main thing that people are going to do, especially because it's open source, is use it as a teacher to train smaller models that they use in different applications. If you just think about like all the startups out there, or all the enterprises, or even governments that are trying to do different things, they probably all need to, at some level, build custom models for what they're doing. And it's really hard to do that with closed systems out there, whether that's OpenAI or Gemini, Google's thing, or whatever. And this is like, gets to a pretty core part of our philosophy is we don't believe there's going to be like one AI to rule them all. Our vision is that there's going to be millions or just billions of different models out there.
So not one God, but many? Is that the way to think about it?
Well, I don't think they're going to be gods, but I do think that to some degree, if you're like an organization, you think you're going to create like this one super intelligence, it does have this feel to me of like people trying to create a god. And that's just, I find that both the wrong way to look at it, but just also very unappealing. You know, there's almost 200 million creators on our platforms. They all are trying to build their community. People want to interact with them. There aren't enough hours in the day. Like, I want to make it so that every single one of them can easily train like an AI version of themselves that they can make it what they want. So it's almost like a kind of artistic artifact that they're putting out there for their community that allows their community to interact with them, but also gives them control over how that interaction happens.
Facebook and you have been blamed for a lot of things, whether you agree or not. Why should we trust you with AI?
Well, it's a loaded question. We have gotten blamed for a lot of things. And I mean, look, I take our role in all this stuff seriously, and I think we've tried to handle all this as well as possible. I'm not sure that it's all been fair, but like, I'd like to think that we're an important and relevant company, so I think the scrutiny is generally healthy. One of the defining things around open source is that anyone can scrutinize the work. And because of that, I think it just puts a lot of pressure to make sure that the quality of the work that you're doing gets better really quickly.
That was Bloomberg's Emily Chang in her exclusive interview with Meta CEO and founder Mark Zuckerberg. And I'm delighted to say that Emily joins me here on set in San Francisco. It was so well timed, the interview, and it's critically important. I think back to the last earnings call where Zuckerberg basically said, we think Meta could be the world's leading AI company, but he's coming from behind a little bit. You did some catching up with him in that conversation.
Absolutely. And, you know, the scale of Facebook, Instagram, WhatsApp is incredible. So Meta AI, their chatbot, is already embedded across all of those products and Oculus as well, and you can use it as a standalone chatbot. But he says hundreds of millions of people are going to be using this by the end of the year. In fact, before the end of the year, which he believes would make it the most used chatbot in the world. So in just a few months, it's, you know, potentially going to be eclipsing ChatGPT. Now, we talked a little bit about the level of intelligence of these latest models, and he admits he still believes there's a gap between Llama 3.1 and the most advanced models out there, but they're already working on Llama 4, and he says they're closing that gap when that update comes out.
Emily, as you were mentioning in what he termed a loaded question, but look, he's used to criticism. But there's been a lot of criticism about the fact that this is open source and the quote-unquote danger that brings. How is he responding to that element of things?
Look, I think broadly, and this is what he's been saying now for many months, open source is more safe, is more secure. You've got all of these people around the world building on it, using it. If they see something wrong, Meta is going to get called out on it, he said, and we'll fix it. And the question is, though, what's in it for Meta? It's not that there's nothing in this for them. If the industry builds on this and it becomes an industry standard, then Meta has more sway in how the industry evolves. So he's saying, look, this is more safe, this is more secure, but yes, this is also better for us. In fact, he believes it's safer than the closed sources approaches of OpenAI or Google, because what's happening under the hood there, you can't necessarily see when something goes wrong. And what's really interesting is, you know, without open source, he says, I couldn't have built Facebook. This is a deep-seated part of his philosophy that he's had for 20 years. It's definitely interesting. He understands why there's been pushback, why some people see him as this sort of unlikely champion of open source, given how Meta and Facebook and its platforms have evolved. But he really doubled down that this is the best way forward.
There is Mark Zuckerberg, the gold chain wearing, new haircut, MMA fighting man. And then there is Mark Zuckerberg at the helm of a critically important company. You spent time with him at his home in Tahoe.
I did.
What did you learn about either of those characters?
I learned how they relate to each other.
Okay.
And, you know, he just seems, you know, I've met him many times over the years. I've interviewed him before. He just seems more comfortable in his own skin than I've ever seen. He also taught me how to wake surf. You know, Zuck has all these side quests. Wake surfing is one of them. And, you know, we talked about how he just has so much energy. These things keep him focused. Priscilla, his wife, was there as well. She's like, I prefer when he's doing all these other things because he just has so much energy to burn off. But my main takeaway was that he's not going anywhere. If you think about Jeff Bezos, who left Amazon, Larry and Sergey, who left Google, there are all these major tech founders who have since stepped back from their companies. Mark Zuckerberg isn't going anywhere. He said, look, I want to see this AI wave play out. It's 10 or 15 more years before the next platform is going to emerge, and I'm going to be around for that.
Emily Chang, can't wait to see more of the interview. We thank you so much. Tune in to this exclusive interview with Mark Zuckerberg online or on Bloomberg TV tonight at 6:30 p.m. Eastern Time. We got some breaking news for you. Apple, a foldable iPhone may be released in 2026. This is according to the information. We're currently at session highs on Apple stock on the back of that. Potentially it could fold widthwise like a clamshell, according to people familiar, and it would make it similar look to that Samsung Galaxy X Flip, Z Flip, in fact, that was released all the way back in 2020. We keep an eye on Apple shares. This is Bloomberg Technology. Big news in cybersecurity. The startup Wiz has rejected Google. The company has turned down that Alphabet $23 billion takeover offer, sticking instead to its plans for an IPO, according to a memo that Bloomberg has seen. The move marks a blow for Google, of course, which is trying to catch up to Microsoft and Amazon on shoring up its security offerings for its cloud services. We're pleased to bring in Dana Wellman for more. And Dana, talk to us about why this was so integral to compete with Microsoft Azure, to take on the other competitors in AWS in the space of cloud.
So Wiz would have rounded out Alphabet's cybersecurity offerings. The company had already acquired Mandiant a couple years ago for a little over $5 billion. And Wiz would have just rounded out the portfolio with a real focus on detecting cyber threats in various cloud platforms. It plugs into a number of major existing platforms, including Microsoft Azure, Amazon Web Services. And these are Google's, Alphabet's major competitors in the cloud space. And it is an area where, as much as Google is one of the major known names, it does still trail Microsoft and Amazon in that major critical space.
You know, part of the interesting part of our reporting, according to sources, is that the leaders at Wiz are also conscious about the regulatory environment, antitrust. What do we understand there, Dana?
So this indeed would have been a really risky deal for Google had it had the agreement gone through. Rather, had Wiz agreed to an acquisition. Google is already facing various regulatory challenges on everything from its search business to its advertising tools, and probably even a much smaller acquisition would have drawn some regulatory scrutiny. And we're talking a $23 billion acquisition. This would have dwarfed previous Alphabet acquisitions, certainly even the Mandiant one that I just mentioned, which was about $5.5 billion. And it would have been a huge risk indeed, which according to our reporting was one factor that the Wiz team considered in choosing to IPO instead of being acquired. That not only did it feel that it could build more value as an independent company, but had some concerns about whether it could even get past those regulatory hurdles in the U.S. and possibly elsewhere.
Bloomberg's Dana Wallman, thank you. Now, coming up on the show, we're going to be joined by Noah Aitchison, author of the Crypto is Macro Now newsletter, to get her take on the newly approved Ether ETFs from New York, not from New York, gosh, from London and San Francisco. This is Bloomberg Technology.